how do we reduce tax legally? The keyword is legally, so we need to understand the basic or the fundamentals about this thing called tax planning. So what I'm going to touch on today is all from the legal perspective. What can be done legally to minimize your tax exposure, right? I always love this saying. Right? It's credited to Morgan Stanley. You must pay taxes, but there's no law that says you got a liberty. So let's stop leaving all these tips to the government, because these are legally your money. So why you don't want to give extra? Give extra, you give donation, the kind of thing. So at least you do something good, which you really want to, right? Honestly speaking, it was taxed long time ago. In 2003 and prior, it was taxed. Then from 2004 and 2021, this exemption order came out. This amendment to the act came out and said that this foreign source income remitted back is not taxable in Malaysia. So everybody happy. Then Manatau, one of the OECD findings about Malaysia, to put us in the grey list of the overall scheme of things in the whole world. I'll say, not very tax compliant, it's this foreign source income matter, right? Foreign source income matter really says that Malaysia still has this foreign source income deriving from dividends, interest, rents, and all that, which is not taxed when it's brought back to Malaysia. So that's not good, not fair to the whole world and all that. Make us feel, that have this slight tax advantage over others. So we are compelled to change the law to conform with the requirements of OECD, so that we get out from the grey list back to the white list, right? Grey list can fall to the black list as well, but so we're trying to move our way up to the white list really. Okay. Then, of course, my personal opinion is this: the Malaysian government was a little bit overzealous in this approach. When they remove everything, they just remove everything, because the OECD talked about interest, rents, dividends, and things like that. Passive income, if you can visualize that. But when it's removed, even business income brought back to Malaysia is taxable. One of these major issues of foreign source income is this: you can bring back two, okay? You can bring back the returns itself, you can bring back the proceeds itself. If you bring back two back into Malaysia, then of course capital not taxable, revenue is taxable, right? Easier said than done for individuals. Easier said than individuals. Companies, they shouldn't have much of a problem, because by the nature of the Companies Act requirement and the auditing requirements and all that, all the documentation is kept in place very nicely. So for companies, not much of a problem here, right? Generally, they should face less problem in getting all these things sorted out. The only problem is with the main problem is the individuals, because first and foremost is what? Our record keeping, pardon my language, sucks, right? For individuals, money from salary goes inside your bank. Look at the bank account. So long as money is there, I'm happy with it, right? That is typically us, right? Typically us. You don't do double entries. You don't go and credit salary debit bank then you go and do investment. Credit bank debit investment You don't right? So how are you going to differentiate all this flows? So this is the challenge when it comes to individuals, and that's why all the more reason. The more important thing is that for individuals, we need to start to be more diligent in our record keeping. That is very important, right? Very, very important. At the end of the day, when you're dealing with RB, the underlying defense is your documentation evidence, right?